Why do your perfect trade setups keep on failing the second you enter the market? It's because you're reading the static chart, while Wall Street is reading order flow. In the next 10 minutes, I'm going to be showing you the mathematical secret to finding winning moves before they actually happen by mastering the 3 steps of institutional order flow. This isn't theory. This is how I secured payouts like this. Most traders are taught to buy the line on a chart, support or resistance. But lines don't move the market, orders do. If you've ever felt that the bank used your stop loss as liquidity, it's because you're missing the tape. Make sure you guys stay until the end because step 3 is the most crucial step. If you miss it, the first 2 steps will technically become a retail trap. Jumping into the charts right now and looking at step 1, we're going to be looking more into theory first, and we're going to be giving you guys chart examples later on, okay? So remember guys, step 1, absorption. I want you guys to pay attention that once market is pumping, you want to be waiting for price to start running to your supply level, and once market enters your supply zone, you want to see how market is reacting in that level. First, we have a long wick right here, so there's some hints that buyers are getting rejected in this level because there is passive sellers that are eating every single buy order in this area. Right now, the next one is we get to see this long wick rejection, and I know you guys are going to be telling me that, hey, Jay says he trades. That is pretty much very obvious with price action. Why do we need order flow? Hear me out, and I can assure you by the end of this video, you will be like, yeah, this guy is giving me an aha moment right now, okay? So looking at this, I know that there is a good looking wick that's enough to kind of say that there is a very clean price rejection. That means it's time to sell. Now, that is one of the retail traps, okay? Now, if we're going to be jumping to the next one, and remember what you guys are thinking right now, like, hey, we don't need order flow, we can just see it from a wick, right? So now let's take a look into this example right here, which is a price chart. I know that there is a wick right here, beautiful wick, but what matters here is not really how the wick looks, but what is the participation that's happening, turning on your x-ray vision to see what's happening inside and dissecting the candles. So if we're going to be taking a look and wearing our x-ray vision glasses with the bid and ask footprint chart, you will get to see numbers over here. Now, the left one is going to be the bid. Okay, this one is all the bid and this one is all the ask. I want you guys to think that these are technically all the sellers and this one are all the buyers. Okay, so the left one is going to be the sellers, the right one is going to be the buyers. The pink color, the purple color here is sellers, the green color is going to be buyers. Okay, so with this information in the way, I want you to kind of visualize and think that what was the market participants doing in this level. Okay, now I want you guys to think about this. I know you're telling me that, hey, it's pretty much obvious in the 5-minute chart without the footprint. What makes the footprint chart any different? Okay, hear me out. Look at this. So you can see this one right here. So that technically equates to over 200 buyers in this area. Now, you can see in the top as well, there's still more market participants trying to buy, a lot of buyers over here. But you have to think of it by seeing this data that's being provided to you right now. What is happening with price? Okay, what is happening with price? Did the buyers, amidst all their effort, get rewarded? No, because the candle closed red. Even though they had all this buying over here, so much buying aggression, way higher than the previous levels over here, so much buys on this top, but the candle closed red. Now, this is giving you a big hint that all the buyers in this level are being absorbed by a lot of sellers in this level. There are passive sellers in this level that are eating every single aggressive buy orders that are hitting the ask. Okay, so once you have this information in the way, this is enough for you to give an idea that, hey, the buyers are trying to buy, but they are not rewarded. Now, I know you're going to be telling me that, well, that's pretty obvious because that means that every wick that you see in the 5 minutes is enough to say that it is an absorption. You don't really need to be going to the footprint charts because I'm sure that every single 5 minutes rejection like this is obviously a lot of absorption in the footprint chart, right? Now, this is the part where you are wrong. So I want to give you guys another example. Look at this, another beautiful wick rejection right here. Okay, right here. Now, you guys are telling me that, hey, it's obviously the same thing as the previous one, right? Let's take a look and activate our X-ray vision glasses and taking a look with the footprint chart. Now, I want you guys to take a look on what really happened here. What do you see here? Although we have buyers over here, you want to think about where was the buyers that are being aggressive. You can see you have 187 buyers here to the point that your point of control is over here. If you guys don't know what POC is where most of the volume is being traded. So if you have this yellow box, that means that is where the most volume in the singular candle is being traded the most. Okay? Now, look into this one. You can take a look in the left side. The volume is being traded to the top, so it's very, very important. But this one right now, okay, we're trying to sell. If we're trying to see absorption, you want to see absorption in this high area. And what do you guys see over here? You see your absorption occur at the bottom, but it's not even an absorption at all. And why do I say it is not an absorption? Because you can see all these aggressive buyers in this level, right? Buys, but this is not big buys. Because the big boys that are very aggressive in buying and very aggressive entering the market is not to the top, but all the way down here. You got your POC to the bottom. You got 187 aggressive buys down here. And were they rewarded? Yes, they were rewarded. Even though the candle closed red, it was not an absorption at all. Because all their buying was able to push prices higher to the point that the red candle closed in between. So I wouldn't really say that it's seller control. I wouldn't also say it's buyer control. It's more or less like a 50-50 case. And look at what happened. Market went down and market pumped. You did not get the same type of reaction as you did with this, because the difference, as you can see over here, you see even the POCs all the way up here. The most aggression of buyers that are hitting the ass is all the way up here. Compared to this, the same type of wick rejection, the POC is down to the bottom. The aggressive buyers that are hitting the ass is not to the top, it's actually to the bottom. Alright guys, now seeing the absorption on a static chart like this is one thing, but timing it live is where the money is. So if you guys don't want to miss me doing this live, I actually host a free weekly webinar in my free Discord. Link's gonna be in the description down below, and yeah, I'll pretty much see you guys there. Okay guys, step 2 is gonna be aggression. How does aggression look like? Well, obviously the same thing as the pattern a while ago, but this time you get to see a beautiful red aggression candle like this. And hey, same again with the price action stuff. You know, it's an engulfing candle. Well, not really, because I've just proved you guys wrong about the X-ray vision, right? Well, it works the same way with the aggression candle. So now looking at the charts over here, I want you guys to understand that absorption is just the setup. To win, we actually need aggression. This is when the big buyer stops soaking and starts attacking the market. And over here, guys, okay, I want you guys to pay attention to the volume candle, because this is the mathematical proof that the balance of power has shifted. So if we can kind of take a look into the price structure over here, and the same thing as I explained a while ago, by turning on our X-ray vision, by turning on your bid and ask, and by playing this over here, you can actually take a look on how price structure is clearly moving. Now, from this on, what do you guys see? You get to see a very simple 106 absorption, right? This is the one that I explained a while ago. 106 buyers are being aggressive to the ask, are being absorbed because the candle closed red. So they're hitting a wall here. The same thing prior to that. You can see that this green candle right here, right? I want you guys to focus on this green candle. What happened in this green candle? A lot of aggressive buying to the top, 69 buying, 55 buying, POCs to the top, and the candle, of course, yes, the candle did close green, but you can see a lot of downwards pressure below. Because you want to think about this, results versus effort. The efforts of them trying to push prices higher by being aggressive to the top, but the results is just the candle going down. This is going to be the first step, which is what I like to call absorption. The next step is where is going to be your aggression. So after seeing that absorption, we want to be looking for the next candle and we want to pay close attention on what the next candle is doing. So the next candle, you can see all the buying over here. And remember, effort versus result. The effort of their buying over here, the result is a red candle with a wick above. That means all the buyers here was not rewarded. But the one that you want to be focusing over here is what did the sellers do? Because we already know that they got absorbed here for the buyers. You want to be seeing if sellers are being aggressive in this level. Okay, so once you see over here, you see yourself aggressive selling of 47 contracts of sells, 55, 30 aggression of sellers in this level, and the candle closed red. Their effort of trying to push prices lower is rewarded. So that is already giving us a hint. And the cherry on top of this entire scenario is you can see that the POC, where the candle or where the volume is heavily traded in this candle, is skewed to the downside. So we have all this effort from the sellers being rewarded, and we have all this effort of the buyers again not rewarded. So that means we have all the absorption here complete. That's step one. Next is going to be step two. All this aggression right here is rewarded. Now, where is going to be our entry? Now, I want to be asking you guys a question. Would you take an entry right here right away, or would you wait for this candle to give you something, or would you wait for another M1 market structure shift? What would you do? Would you wait for an inverse fair value gap or whatever, you know, like you would be waiting for this low to get taken out, this IFVG to get taken out before you take your entry? What will you guys do? I want you guys to be pausing over here. Before you guys click next, please comment down below what your answer is going to be. Will you take a direct entry right now by giving me a 1? Or would you wait by giving me a 2? Or the answer is I don't know and you're giving me a 3. Come on guys, give me a comment down below. 5 seconds. I'm not going to be doing anything. Editor, don't cut this out. 5 seconds. Okay. 5 seconds is up. Where would my entry be? Well, my entry is going to be all the way down to these lows right here. And you want to be putting your stops. Your safe stops is going to be all the way up here. But if your safe stop is all the way up here, you want to be putting your take profit to be at least, for me, let's say 1 to 2. Like this. Okay. Targeting all these lows. Or you can eventually activate another cheat code, which is the volume profiling. Something like this. So you get to have an idea of where the POC or the maximum aggression, which is your first take profit right here, your main take profit right here, or since you already have your x-ray vision, you can turn on your bid and ask, and you want to be putting your stop loss just right above this aggression candle, which gives you a much better RR. So let's turn this off, and we want to be taking our exit down to this value area low. So let's try to play this out and let's see what happens. You can see market is going down. We might get some pullbacks here. So we have a pullback into this IFVG. And this is what I mean, guys. It's either you take your direct entry right now or you wait for an IFVG. But hey, the thing with order flow, you get your first early entry before the inverse fair value gap. Now let's try to play this a little bit further down. Our target is going to be down here. Right, we're playing again a pullback right now. And let's see if we can have a second drive to the downside. Remember guys, first take profit is going to be the POC, and bang. Look at this beautiful candle just smashed all the way to the downside. Let's try to speed this up again. Play this out and bang. Absolutely beautiful trade right here. That would be netting you over 7 RR. And remember guys, if you took an entry over the inverse fair value gap instead, like this. Let's say you took an entry in the inverse fair value gap. Your stop loss is above. Take profit right here. You're netting 1.78 RR versus 7.41 RR. So look into this right here. This is the payoff. We enter when the math flips into our favor. Because looking at this bar over here, this is the absorption. And then looking over here, this is clearly the aggression candle. And this is our trigger. Remember guys, we really aren't guessing over here. We are following the math of the tape. This 3-step blueprint is the only entry criteria that you guys need in 2026. If you guys found this helpful, I've actually put a printable checklist of these rules in the Discord. I want you guys to be joining the free link down below, and I'll be seeing you guys in my next weekly webinar. See you next time, boys. JCAC out.